Hello, Simple Plan community. It's great to be with you again this afternoon. We're running a little late. Let's get right down to it. I want to talk to you today about mortgage life insurance. And you might wonder, how is that an interesting topic? Well, the main reason it's an interesting topic is because if you've got mortgage life insurance, you may have a very big problem. And so you should listen in here because you may well not have the life insurance coverage that you believe you do. On top of that, you could be saving yourself a whole pile of money. So how do we come to that conclusion? Well, it's not just us who believe that. There's many media articles about it. Global News says banks sell mortgage insurance, but independent experts say you shouldn't buy it. The Toronto Star says why you shouldn't buy mortgage insurance. They even have a cautionary tale about one couple's very difficult lesson in life insurance because of their mortgage insurance. CBC Marketplace famously ran a program called In Denial, where they talk about two families who were quite devastated by the problem they had with their mortgage insurance. So let's dig down into why this mortgage insurance might be such a problem. It seems like it should be easy. You walk into wherever you got your mortgage. Usually whoever's selling you the mortgage would have another little form that says, hey, do you want mortgage life insurance? It sounds like the responsible thing to do. It seems easy to do. They say they're going to ask you a few questions, and once those questions are done, you'll have insurance coverage for the value of your mortgage. Sounds great, seems responsible, sounds easy to do. But let's run through the reasons that we don't like, and all the media don't like, and most experts don't like mortgage life insurance. All right, the first reason, it's not the number one reason. The first reason is that it pays the bank and not your family. So what that means is if you should unexpectedly pass away and you're trying to do the responsible thing, not leave your family in financial jeopardy, you want them to be able to maintain their lifestyle, so you want your mortgage paid out. That may not be the most important money that your family needs. Unfortunately, when you have this mortgage life insurance, you don't get any option. So let's say, for example, a surviving spouse needs some cash but doesn't really have any. So they've got this mortgage life insurance that's going to pay out. Maybe it's paying out $200,000, $300,000, $400,000, $500,000, depending on the size of your mortgage. The problem is it's paying out your mortgage. So while they're no longer going to have a mortgage payment because the mortgage has now been paid out, and that's of great benefit to the bank and, of course, to the surviving spouse, it doesn't give any flexibility. You can't take that cash and do anything with it. So your mortgage life insurance, as much as anything, is protecting the bank, not simply protecting your family, which is what you're trying to do. Now, some of the other reasons, you can't move this if you change mortgage providers. So let's say your mortgage renews, you go to get a new mortgage, you find out you can get a better rate at a different mortgage provider or a different bank, and so you decide to go there. Now the problem is your mortgage life insurance was associated with your previous mortgage, and so now you're going to have to answer all the same questions again. And what that means is if you've had a change in your health situation, you may no longer qualify for that life insurance coverage. Your coverage is not guaranteed. It's only associated with the lifespan of the particular mortgage that you have when you took out the mortgage life insurance. Here's another big reason that a lot of people don't think about, the reducing coverage. So let's say you have a $250,000 mortgage. You take out mortgage life insurance, and so you think that you have $250,000 in insurance coverage. And you do on the first day. But what happens every month, maybe it's every 2 weeks for you, but what happens every time you make a mortgage payment? You pay down some of the principal owing on your mortgage. And your mortgage life insurance is only covering the value of the principal of your mortgage. And what that means is as you pay it out, as you pay down your mortgage, the face value of your mortgage life insurance is declining. So even though you started out with $250,000 in coverage, if your mortgage was that amount, maybe a few years later, you've paid it down some, of course, through your regular mortgage payments. Maybe you've made some extra payments, and the mortgage face amount is only down to $150,000 in principal. Well, that's all the life insurance you now have in place. So you're continuing to pay premiums, but the value of your mortgage life insurance that it's going to pay out is decreasing every time you make a mortgage payment. Now, while the amount that you're paying or the amount that the insurance is going to pay you is decreasing, your premiums on your mortgage life insurance may well be increasing. And that's because the rates are banded in age groups. So with some it might be 5 years, with some it might go up every year. But every period, at the end of every period, your mortgage life insurance premiums will increase. And that's happening even though your amount of coverage is decreasing. And so then over time, you're paying more and more premium and getting less and less coverage. That's not the case with conventional life insurance. The premiums, even worse, the premiums are not guaranteed. So while you took out your policy, your mortgage life insurance policy at the start of your mortgage, what happens is with the non-guaranteed premiums on these mortgages, they can increase the amount of premium you need to pay for your coverage. Now, they can't do it for you individually, but they can do it for whole classes of individuals. So that would mean all the people like you. They could increase the premiums by whatever amount they choose to based on that. So your premiums are not guaranteed. They could well increase. Now, another problem is the coverage ends with your mortgage. So you think you've got this life insurance, you pay out the mortgage, well, now you have no coverage. So even if you wanted to continue with your life insurance coverage, you don't have that option with mortgage life insurance. If the mortgage is gone, the coverage is gone, and there's nothing that you can do about that. With conventional life insurance, it might have covered the amount of your mortgage, but over time you decide that you want to continue with more insurance coverage for some other purpose, and so you decide to keep that in place. With conventional insurance, you have that option. Now, another problem is that mortgage life insurance is more expensive than traditional coverage. And so what that means is there's just less underwriting going on with mortgage life insurance. So for example, when you take out a conventional life insurance policy, they're going to ask whether you smoke or not. That has an impact. But they're going to ask many different types of lifestyle questions. Of course, they also ask whether you're male or female. And mortgage life insurance doesn't differentiate that much. They certainly differentiate based on whether you're a smoker or a non-smoker. But other than that, everybody at the same age pays approximately the same amount, whether they're male or female. So by the way, women, if you get conventional life insurance, you may pay up to 30% less than men do, men that are of the same age as you and same health condition. That's just a fact because men are more likely to die. But with mortgage life insurance, that is not a factor. So I would argue, in fact, that women are paying far too much for mortgage life insurance, especially. Now, finally, we come to what I will call the number one reason that mortgage life insurance is a major problem. And that's because you can't really know if you're covered by your mortgage life insurance. Well, how can that be? You went through the process, you submitted the application, you've been paying premiums for years, of course you must be covered. Well, here's what happens. With conventional life insurance, when you submit an application, there's a whole process you go through. You answer many, many questions, many medical questions and lifestyle questions. They may take blood or urine samples. They may get a doctor's report from your doctor. They do a lot of investigating. And when they issue that policy, it's now in place. They can't take it back. There's nothing to be done about that. With mortgage life insurance, they have, and that process that I just described, by the way, is called underwriting. With mortgage life insurance, they use what's called post-claim underwriting. That means that they don't do the underwriting. They don't spend the money up front to do all that process. Conventional insurance, they spend hundreds, sometimes thousands of dollars through that process before they issue you a policy. With mortgage life insurance, they don't undergo that process. They ask you a small set of questions, probably somewhere between 5 and 10 questions. Some of the questions are poorly worded, they're vague, the answers are uncertain, and as long as and they're yes or no questions, and as long as you've answered the correct answer, the answer they require to each of the questions, they issue you the policy and you start paying premiums. But they don't do their elaborated underwriting unless and until someone makes a claim on that insurance policy. So if you pass away, then the mortgage life insurance issuer is going to go in and they're going to come back and do a very thorough investigation to see whether they believe you answered all the questions accurately. And they're going to go through doctor's reports. And if they find anything, they're going to deny the claim. And this happens, I don't have a Canadian statistic, but Australian insurance that's issued on the same lines, on the same principles, has about a 25% claim denial rate. So that post-claim underwriting, where they don't do the investigation unless and until they make a claim, unless until somebody makes a claim, that saves the insurer a lot of money. They don't do all the underwriting. It's a lot of work to do that. But it puts you at risk because you don't really know if that coverage is in place and going to hold and going to endure until such time as you make a claim. So you may not even be covered. So if we go back and we ask ourselves, what is it that gets so many of these media outlets talking about this? Well, it's for exactly the 8 reasons I just laid out there, and they all describe this problem. The stories of this family that was running the Toronto Star, the story of and it's awful, the 2 stories in this In Denial piece from Marketplace. And even though some of these stories appear old, nothing has changed. The industry is the same as it was. There's no difference from that time to today. And so if you have mortgage life insurance, you really should be giving close consideration to whether that's the right product for you. Now, if you want to go and check out as well whether you might save some money, and perhaps you well could, by getting, and you still want coverage that's kind of like mortgage insurance. So it's mortgage insurance in that it has a reducing face amount, also perhaps has disability or critical illness insurance attached with it. So if you're unable to work because you're disabled, it pays your premiums. Or if you're unable to, or if you contract a critical illness, it pays as well. You can look for something, there's many flavors of this. The tool that we recommend is called Better Mortgage Insurance. And you can go and get that at bettermortgageinsurance.ca/the simple plan. That's the website that we have for it. And so you can go down there, and they also have an explanation of the problems with mortgage insurance. This is offered by a particular life insurance company called Assumption, who offers a unique product that actually has all 3 types of insurance bundled together: the term life insurance, the disability insurance, and the critical life insurance. So if you're interested just in finding out what you might do, you can actually go and do your own quote directly online at their website and find out. You just step through. I'll just make someone up here. And there's just a few quick questions. The unemployment question relates to the disability coverage. And they want to know if you're working more than 20 hours per week, if you're married, or you have a significant other who's part of your home ownership. You can add a co-applicant. And then you might just input your information. So maybe you've got $150,000 left on your mortgage. And I have no idea right now. I guess that current mortgage payment might be around, what could it be? Well, let's call it $1,000 a month. That's probably high. And then you quickly calculate, and it's going to show you what you could get. You can also enter your information if you want to be sent the report for your detailed quote. So you look at the life insurance benefit, that's $150,000. That's not going to change. You look at the disability insurance, that's $1,000 per month that it would pay you. And if you look at the premium product that they offer, which includes life insurance, disability insurance, and critical illness insurance, which, by the way, no bank offers that combination. Banks offer, with their mortgage life insurance, offer life insurance and disability, or life insurance and critical illness, but not the three. And so you can see that the critical illness benefit, if you contracted one of the illnesses, would be $24,000 in this case. Anyway, you can go and get that information, have a look at it if you like, but you see how quickly you can check what you're paying. Now, you may not even know what you're paying. For some mortgages, it's coming out as a separate payment on your bank statement, so you can identify where your mortgage insurance payment is. But for others, it's actually coming out bundled into your regular, whether it's monthly or bi-weekly mortgage payment. Sometimes the cost of the mortgage life insurance you bought is bundled in there, and you actually have to look at your mortgage statement to see how much it would be broken down in there. Otherwise, you may be able to see it as a separate transaction going through your online banking account on a regular basis. So that gives you an idea of those 8 reasons why there's a problem with mortgage life insurance, why you should be very careful about it, and why you should do some real, just take a moment right now and go and look quickly at what you might be saving, because you could save a bunch of money, but more importantly, you could save your family a lot of grief and misery if something tragic happens and it turns out that your family is not covered as you thought they were. So as I do regularly, I invite you to join the Simple Plan community. That's at facebook.com/groups/Simple Plan community. You can join us there, and you're going to be traveling through life with like-minded people who are looking to take care of their finances in the most effective and efficient and powerful way possible for the benefit of their families. And our helpful tool for today is that Better Mortgage Insurance website. You can go there, do that quote like I just showed you. You can find that at bit.ly/SPBetter. That's bit.ly/SPBetter. As always, we really appreciate you joining with us every week. You can find us on Facebook at Macbeth Group, or you can find us on Twitter or Instagram. At Instagram, we're also at Macbeth Group, or on Twitter, we are Cash Coach Canada. My name's Brad Macbeth. I want to thank you very much for joining us today. We really appreciate it. We appreciate you spend time with us. We want this to be valuable to you. Leave us a comment. Go to our website. By the way, on our website, which is called getthesimpleplan.com, you can find a blog post that goes over everything I just said again. Of course, we'll repost this on Facebook and on YouTube if you want to kind of delve some more into the details of what the problems are with your mortgage life insurance. Thanks very much. We hope you have a great day, and all the best in your finances.